Oil prices are in a delicate balance as the world watches Russia's oil supply with concern and awaits the U.S. Federal Reserve's decision on interest rates. The future of global energy markets hangs in the balance. Russia's oil production and exports have been under scrutiny since the recent drone attacks by Ukraine on its refineries. These attacks, aimed at disrupting Russia's war efforts, have raised questions about the stability of the energy sector and the potential impact on global oil markets. But here's where it gets controversial. Analysts from J.P. Morgan suggest that the attacks on export terminals like Primorsk are not just about limiting Russia's ability to sell oil abroad. They argue that these actions indicate a willingness to interfere with international oil markets, which could drive oil prices even higher. Goldman Sachs estimates that Ukrainian attacks have already taken a toll, reducing Russia's refining capacity by approximately 300,000 barrels per day in August, and continuing into September. Despite this, the bank assumes only a modest decrease in Russian production, as Asian buyers remain interested in Russian crude. The U.S. Treasury Secretary, Scott Bessent, stated that the government will not impose additional tariffs on Chinese goods to discourage China from purchasing Russian oil. However, this decision is contingent upon European countries taking similar actions against China and India, the largest buyers of Russian crude. And this is the part most people miss. While the world focuses on the geopolitical tensions, the U.S. Federal Reserve's upcoming meeting on September 16 to 17 could also significantly impact oil prices. A widely expected interest rate cut by the Fed could stimulate fuel demand, but analysts are cautious about the overall health of the U.S. economy. Markets are also considering the likelihood of declining crude inventories in the U.S. last week, with official data expected on Wednesday. Energy strategist Walt Chancellor at Macquarie Group predicts a significant drop in U.S. crude inventories for the week ending September 12. A Reuters poll on Monday supported this prediction, with analysts expecting a decline in U.S. crude oil and gasoline stockpiles and a rise in distillate inventories. As the world navigates these complex issues, the future of oil prices remains uncertain. What do you think? Will the geopolitical tensions and economic decisions shape the energy landscape? We'd love to hear your thoughts in the comments.